real business owners.
What are the 5 things that a credit score is built around, so to speak, in terms of how the score is calculated? Let's go over that, and then we'll go over some actual figures of utilization and some things like that so that we can kind of drop some nuggets on them.
Sure.
And just try to bring value today.
The two biggest factors are going to be payment history, which actually makes up 35% of
The entire score.
So actually making your payments on time, right?
Yep.
So if you're missing payments, 35%.
You're working backwards.
That's the
chunk.
biggest chunk.
Yeah.
That's the most important.
Yeah.
Second chunk is going to be 30%, which is just actually your utilization when it comes to revolving accounts. So credit cards, right?
Yeah.
So if you're over 40%, it's going to make those scores
Dramatically.
drop down. And we're not actually talking about 40% over all of your accounts. We're talking about individual
I'm
credit
glad
card.
that you brought that up, because when some people pull their credit, it does say overall utilization.
Correct.
And then they're like, what are you talking about? My utilization is
I'm at 10%.
At 10%. But all their debt's on one card
Correct.
with a $10,000 limit, and they have a $9,000 balance. So you're at a 90% utilization on that card, which is dragging your score. Now, let's say you had 4 credit cards with $10,000 limits, and you distributed that $9,000
Correct.
across evenly across those 4 cards. Okay, now you're at roughly 2,800 or whatever it is, right? Or
Right.
20, or it's less than that, 2,300 or 2,200 per card, right? Now your utilization is at 23%.
Right.
Okay.
So if you don't have the cash to pay it down, if you're trying to go out there and get a loan on
Correct.
something, your scores are down.
Yep.
If you don't have the cash to go out there and pay it down,
But you have another card.
spread out your risk.
If you have another card, or if you don't have another card and your score's good enough to maybe get approved for another card,
Right.
the idea is to spread the debt so that your utilization is lower and your scores go up.
Right.
And it helps you get prime rates, shit like that, right? Prime rates mean you're paying way less over time.
Right.
So those are 2 right there. What are the other ones?
Inquiries is only going to be about 10% of your score. So I think a lot of people think that inquiries make up
Isn't that so weird?
a lot more.
Well,
than
every
what it
single time, like,
actually
is this a
does.
hard inquiry? Everybody asks that, and it's like, they're okay having 550 credit score, but they're worried about a hard
worried about an
inquiry.
inquiry.
You're worried about the wrong shit, yo. Like, that's just the truth, right?
And don't let anybody just pull your credit,
Yeah.
right? Because it 10% is 10%.
Yeah.
But it's not like one pull is gonna destroy your score.
Yeah,
Right.
yeah. I mean, if you
Just
have
be
kind of
careful of the car dealerships, man.
Yeah.
Right. They will blast
They'll
you out
shotgun
there.
it out
Oh,
there.
Yeah,
you know?
they
They've
will
done it to
blast
me.
you
They
out
got me on
there.
that one. I was
There's got to be
younger.
a car sales guy listen to this, and he's just like,
Oh yeah.
don't say
10%. But when you send out 100 inquiries at once,
Right.
You know?
Right.
Exactly.
And then the remainder percentage is going to be spread out on credit diversification. So basically the types of accounts. So
Like-
mortgage, credit cards, auto loans.
So if you just have one credit card on your report, it's not really that diversified, right?
Right. So an 18-year-old kid can have a 720, but all they have is a credit card with a $300 limit. But
Yeah.
They're walking around pounding on their chest. They got a 720.
But the
You can't
score
finance
doesn't
much.
mean but the score doesn't mean that much because
Right,
there's not a lot on there, right?
And then the last thing is just going to be the length.
The credit depth.
The length of your accounts, right? So the longer you have accounts,
Yeah.
the better. So paying off things early, I mean, it's great to pay things off early, but if you have the cash to pay off your car, just leave it.
Yeah.
If you're trying to build your report, if you're trying to build
credit.
your history,
I mean, if you have
set it up
800
on
credit-
auto pay
yeah.
and let it just come out.
Cost of paying a little interest can be worth it in the long run
Yeah.
if that's your goal.
if it's
Like,
going to get you to a score where you pay a lot
dude,
less.
interest rates on things are a lot better when you're in the 800s than they are even in the high 6s. Yeah, you can get
but
qualified
you
for a lot
won't
of
get
stuff
into those
680.
eights without length
Exactly.
of credit, right? So, and that's one thing that's actually been brought up a lot is, well, I have this credit card that I never use, so I just close it.
Yeah.
Well, no.
Don't.
Leave it open.
Yeah.
Yeah.
You're not using it. You don't have an annual fee,
Yeah.
hopefully.
Cut it up and
And just because a card has an annual fee isn't a bad thing. There's
Yeah.
usually perks with those annual fees, right?
Yeah.
But leave credit card accounts open that isn't costing you any money because it's building your score. I have a line of credit attached to a checking account that I don't even use basically, but I've had it for 10 years, so I'm not going to close that bank account because it reports every month to my credit that it's open and that it's in good standing. So